Hey all, welcome to ShareTreck. This is Raj here. Friends, I had promised you that I was looking at all the Trump promises and working out on how they would impact the stock market going forward. So today I'm going to start off with the first of the lot of promises, which is DOGE, government spending cuts. So will DOGE succeed or will it not succeed? It is something that we have to see when it actually happens, because these are all very bold and radical promises. They may or may not happen, and when they happen, they can change the landscape significantly. So assuming that DOGE is successful, let us see what's going to happen. For this, I have already collected data from government spending of 2024, and we're going to use that as a basis on which we can project what's likely to happen going forward. So let me first start off with the charts. Well, here is the first chart that I want to present to you. And as you can see, this is a pie chart that shows all the expenses the government is incurring right now, and it shows it in percentage terms. As you can see, social security is a huge component out here, which comprises around 20%. Medicare is around 16%, defense is around 14%, health spending is around 13%, and net interest is 13%. So net interest as a percentage of total government spending is pretty high. And one of the immediate benefits of cutting costs going forward to 2025 is going to be that the net interest could start coming down, and that amount of money which is released from net interest could potentially go to build back the sectors of spending where the cut was made earlier. So by itself, the cuts are not a bad thing, but it also depends on the size of the cuts. We are talking about a cut of around $2 trillion. I personally don't think it's going to be possible to cut $2 trillion out of government spending. For example, if you cut in social security, there are going to be a lot of people who are dependent on social security. They will fall into the poverty line. There could be a lot of social anger and unrest. If you were to cut out Medicare, that would mean there will be a lot of lost productivity, and a lot of people who have a dependency on Medicare and who are still in the workforce might get pushed out of the workforce. Both of these could increase the poverty levels, increase the income disparity, because these are all social nets that we are talking about. On the other hand, if we were to reduce defense, which I think is never going to happen, especially with the current environment. So I would just not touch the defense sector. And when we're talking about cutting in defense, then I would look at companies like Palantir, AV, and then we have Raytheon, Boeing. These are all companies which are dependent on defense spending, and if defense spending was going to be cut, then the enthusiasm that we see in those stocks would not be justified. So I think defense cuts is a non-starter. I don't think that is going to happen. The next area of cut could be the health sector. Again, all these cuts, whether it's in social security, Medicare, or health, is going to cause a lot of political capital to be expended, and we have the midterms coming within 2 years. So I don't know where exactly they are going to cut, but assuming that they succeed to cut, I wouldn't say 2 trillion, but let us look at that and say they are going to cut maybe 10%. Let's look at it in a different way to see if we can get more insights. Let's look at this spending by agency. The same data has been turned around and converted into agency-wide spending. So the 28% that you see out here is Department of Health and Human Services, which has got 28%. And then Social Security Administration has got 21%. And then we have 16% in the Department of Treasury, and Department of Defense and Military Programs is around 14%. So if I look at it from a department perspective, and if I imagine that they're going to be able to deploy AI in order to reduce personnel costs and continue to maintain service levels with less people, I think that again, if we're looking at the cost, of course, you're going to save the cost of employees. There'll be some payment that is to be made for terminating those employees. But at the same time, you're also going to be spending on building the AI infrastructure and a new team of people who are going to manage that infrastructure to maintain the service levels for each of these departments. So in the short term, I do not see how one would be able to cut costs to the tune of 2 trillion. But assuming that they manage, let us say, hypothetically, they manage to cut 10% of government spending. And what would that do? That government spending actually feeds into GDP. And if you were to reduce GDP by that 10%, that means you're shrinking the economy. When the economy shrinks, you're in a recession. And when you get into a recession, then the central bank will have to stimulate the economy by going with easy money policies, reducing interest rates further. And that's one scenario that we are looking at. So I think reducing government spending is a double-edged sword. So on one hand, you're going to reduce the interest costs that you're going to pay. You're sending a signal to the wider world saying that we have become fiscally more responsible, and that could make the US dollar strong. When the US dollar becomes strong, it is deflationary because imports become very inexpensive. The prices go down. Domestic companies would not be able to compete, and that's where the tariff comes in. If you put the tariff, it makes the imports expensive, and it gives some support to the domestic companies to stay afloat. But overall, the sufferer is the consumer or the taxpayer, because at the end of the day, everything, including the government, is run based on taxes. So I do not see how the tariff is going to be by itself compensating for all the cuts that have been made in government spending in order to keep the local economy afloat. It has to be paired along with some kind of tax increases, and you can't increase the tax on already highly taxed working class people and the bottom 90%. You'll have to look at increasing tax on the top 1 to 10%, but I don't think this government is going to look at cutting their taxes. The billionaires have funded this government to get a 2 trillion tax cut. So there are a lot of conflicting desires out there, but today, just focusing on DOGE being successful, I would say that it's going to push us into a recession, assuming the other measures don't take place, like tariff coming into place and a corresponding tax cut, tax increase on the rich, so that tax relief can be given to the working and the lower classes, thereby helping not only the smaller companies, the local domestic industry by increasing the tariff and making them more competitive, but also giving purchasing power to the working people and the lower end of the segment, which will spend every cent of tax that they have saved into consumption expenditure like food, clothing, and shelter. Whereas giving tax cut to the rich means that they're not going to be spending all of the money that they save through tax cut. A small portion will go to buy a yacht or something, and most of it will go into buying back shares, and the top 1 to 5% will continue to grow, whereas the rest of the population will be in a difficult position. So I think there is going to be a lot of negotiation and horse trading going on in order to achieve this DOGE cut. And again, DOGE is not a government department. It has got advisory capacity, so everything is going to depend on their ability to convince Congress to approve a whole lot of these cuts. So we'll start seeing what happens, because the first round is already in place, where we see components of the GOP fighting with themselves. The biggest feud now is Laura Loomer versus Elon Musk, where Elon Musk is saying we need to get bright engineers under the H-1B from abroad. They'll work for lesser and they'll deliver much more. We can't find that kind of people in the US. So that's the first flashpoint that we are seeing. So there's going to be multiple flashpoints, and how these things resolve will depend, will predicate what's going to happen to the stock market going forward. So if DOGE succeeds, I think that it's going to be recessionary, and in recession, you will see the defensive sectors doing much better. Energy sector, utility sector, those are the ones I think will be able to give some sustained returns on an ongoing basis. And I'll always look forward to the Maslow's theory of hierarchy. Basic food, basic clothing, and basic shelter, these are the areas where money will continue to be there, because people need that regardless of anything, and those sectors will continue to pay dividends and maintain value in the stock market. The others, which are all looking at future growth and building up infrastructure for the future, those are the ones which are going to lose a lot of value. positive. So that's the way I'm looking at it, and I want to hear from you guys what you think about this. Of course, these are all my personal opinions and not financial advice. So I would request that you keep that in mind. So put your comments there so that I can read them, and let's have a discussion. Thanks and have a great day. Bye for now.